gold investment, planning for the worst stock market crash in history. The stock market is completely disconnected from reality here in 2020. It's being propped up artificially by the Federal Reserve to prevent a crash worse than the 1929 Depression. And this is a fool's game that will end in economic tragedy. The Fed did the same thing in 2008, and all they did is push the can down the road to 2020, and something has to give. First, I'm an investor, not an advisor, and this video is for information and entertainment purposes only. My opinions are my own, and of course be sure to investigate, ask questions, and make sound decisions in any investment that you might make. In a moment, I'm going to show you the Dow Jones Industrial Average and gold prices in 2020, and you can draw your own conclusions about what you see. First though, let's start with the Kindleberger-Minsky bubble chart. This was developed in the late 1970s by two economists who were studying the nature of the stock market and stock market crashes. And you can see that they derived main stages in the bubble, starting with smart money coming in on the left, and then institutional investors coming in the middle, and then the public coming in at the end. And then you can see the peak where it says new paradigm. There's a huge drop off, and then there's another, what's known as a bear bull market, and I've got that circled in blue with yellow. That's where we are today, I think, in the stock market. We had this huge drop off in March of 2020. Fed came in, added a lot of stimulus, and the market is climbing back up. But there is no way that the market can continue to climb with the economic indicators being what they are. And what we're going to see sometime in 2020, maybe 2021, is a huge collapse that will be worse than the 1929 Depression, in my opinion. The Fed is doing everything it can to prevent that, but I don't think the economic foundations are going to support even the most extreme federal stimulus. So take a look at the Dow Jones in 1929, and you can see exactly what I'm talking about. Here is the rise, then the fall, then the bear market where I've circled in blue, and then a huge precipitous drop. And if you look at what's going on in the S&P 500 right now, you can see again we have that huge drop there in the first quarter of 2020, and then we're having the rise. And the question is, will that rise continue to go up? And the answer has to be no. I mean, we've got corporate bankruptcies all over the place. Small businesses have been wiped out across the country. There is no change in the COVID pandemic at all, except that people are tired of being sheltered in. And so we're going to see huge COVID surges through the summer and fall and winter of 2020. It's just bad news everywhere you look. Earlier, I said we would cover the current Dow Jones Industrial Average and gold prices, and take a look at this. So you'll see that in the past couple of years, gold has been priced and continuing to rise. The Dow Jones, of course, have gone up, but only in the first quarter of 2020 do we see gold actually crossing the line and actually exceeding by a percentage gain the Dow Jones Industrial Average. And you can see this is exactly what happens in these kinds of markets. So let me know what conclusions you draw by liking and commenting on this video. And if you like this video, subscribe so you can be notified of my upcoming videos. In the next video, I'll be covering the mechanics of investing in gold bullion. Those are gold bars. So join me then, and I will see you there.